Good morning, traders, and this is your Aussie South African top 40-day trade setup for today. Friday we ended up with an engulfing bar, bearish engulfing bar, and then yesterday we've got some nonsense data on the chart. So the blue line is actually the close. So we've ended up with a piercing pattern to the upside, which is the Aussie is tracking the Dow pretty much to the T at the moment. So there's a couple of things that worry me about the Dow and the Aussie charts at the moment. The first one is the oscillators on the daily. When they are far apart like this and getting close together for a cross, I normally get worried because that's a fairly strong move coming, and that's a bearish move coming. Okay. The other thing that's a little bit worrying is that we have a bit of a flag. You don't really see it on the Aussie, but on the Dow you see a bit of a flag, and there is also a gap target for the Aussie, for most markets, actually, the European markets and the US markets, as well as the Aussie. So I'm a little bit cautious here. I said yesterday I wasn't really interested in trading this, didn't trade it at all. But in hindsight, the trend was up. We had a pullback to moving averages, so a bounce off there should have indicated a move to the upside. But anyway, it's not something that I was really interested in. What I do find interesting, though, is that we find a little bit of I do that, so shoulder up and now another shoulder forming, or cup and handle. So there's your head and shoulders there. It's a triple head and shoulders there. But now if you take it bigger, we need a break above this 41,757, and that gives us a cup and handle. So there's a lot of bullish signals here, but I think the ultimate goal right now, or the first goal, is obviously going to be that gap, which lines up with the 200 EMA on the 3-hour. So that's 43,690. I think that's the ultimate move to the upside that we're looking for. If we get down to the hour, you can see yesterday was not very comforting. Okay, now there's a couple of things that are playing on my mind at the moment when I look at this. So we had a fairly strong move down. We broke through the moving averages. We're now bouncing up and down above and below the moving averages. Okay, we had bullish signals there, bearish signal basically, then an inside bar that turned it into a bullish signal, went up, and now we've got inside bar, inside bar, inside bar. So what I mean by that, I should just move those lines, is those three bodies, not the tails, just the bodies, right? This one, and this one. They all fit inside the first bar. Okay, so when you get three inside bars, or 4 or 5 inside bars like that, and it breaks, it normally indicates a break to the downside, and it's happening off structure as well, and that structure is the 200 EMA on the hour. So yeah, I'm still sit on the sidelines for this one. High time frames are saying we have a fairly strong move up, but at the moment I have a feeling we're going to have a second move with this move down. So there's your move down. Let's move that up the way. There's my second move. Okay, that second move would validate a break of the head and shoulders. There's my shoulder, there's my head, there's my shoulder, and that would give me another bit of structure here. Just going to take it there to be conservative, and that's going to bring us down to here. Okay, so if I take these two levels here, and we do that, so that's a bottom gap close, and then a target in the middle of nowhere, probably this breakout here. Okay, so that's kind of what's worrying me. So what I'm looking at here is a potential move to the downside. We need to get through 39,180, and that would target 37,914, and then 31,613. that's basically the target to the downside. Okay, now the reverse is true. So that's, if we start breaking below I pretty much take this trend line here. If we start breaking below that trend line, that's going to validate that stop's going to be above the 200 EMA. But that being said, we have the converse that's true as well. So we have a fairly tight channel here that broke and was tested. You can see the green bar broke it, red bar tested it, and we bounced off it and then moving to the upside. Okay, so this here could be a bit of structure from the bigger move. Okay, so there's a lot happening at the moment, and just delete the noise, you'll see what I mean. So if you look at the 4 hour here, you can see trend is up. Moving averages have crossed, not the moving average, sorry, the stochastics have crossed over far apart. So on the long term, that is looking like a move to the upside. Short term is looking like a move to the downside. 50-50 call at the moment, as far as I'm concerned. I think they are trying to build a trap here as well. So, all that being said, if I was to trade this today, I would be on probably a 6-minute chart, to be honest, and I'll use some structure off the 12 or 15-minute chart. That is a range break. If we break the upside, I'm long, stop below here. If we break the downside, I'm short, entry here, stop above here. Okay, that is going to give you sort of a 500-point range, and that's pretty much what I would trade. Okay, and I'd more than likely trade the range break first and then see what happens. Any break to the downside, probably the range target and the 12-minute 200 EMA here that would come into play. But that's kind of the structure that I can see, and that's what I'd be looking at on the low time frames. If we do break up and we continue moving up, then obviously look at the bigger time frames and start looking for those bigger targets. If we break to the downside and we stay down for an hour or so, then start looking for your bigger targets to the downside. But I'll take some profit and leave 1 or 2 runners in. Okay, here we are. That's the way I would do it. But ultimately, I'm not trading this today. I think there's more structure on the Dow, S&P Dow, and the Nasdaq at the moment. It's a little bit more structured and not as wild. That's where I'll be today. Anyway, hope it helps, and we'll catch you later. Cheers for now.